Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts, and here to take us through the trades, we've got Don Kaufman, co-founder of Theo Trade. It is great to see both of you. All right, Don. All right, let's start out with the first one on your list. You've got Alibaba in a focus. It is holding on to a gain today. It's had strong gains year to date. But what are your views on this?
Right now, well, you're going to see they're bearish. A lot of my views are bearish right now. So what we have in the marketplace is this effective rip and rally. I mean, Rick will show you this in a minute, but it really doesn't matter what chart we look at, whether it's something like Meta, whether we were looking at Baba, we're going to look at Netflix in a moment. They all look relatively the same, and that is market gets this really strong bid back under it. We rip to the upside, and I'm going to be looking, and this is going to be the phrase of the day: fade the bid. And we're going to do exactly that here, specifically in Baba. Look, Baba is right in the crosshairs, if you will, of this trade war. And we're at the point right now where even if they do solve everything literally tomorrow, there is damage, real damage that has been inflicted to this entire business model. And if the trade war persists, where does that actually leave us? Their business model has actually got to be called into question. And yet the stock is rallying because it's rallying with the rest of the marketplace. This is more about correlation than it is any reality to the structure of their business. As such, I'm going to take actually a shorter duration bearish position in here, just going out to the May 9th expiration, going and doing the May 9th because I want to get in there before earnings. I'm going to buy a 118 put on a sell a 116 put, just a $2 wide put spread done for an 80-cent debit, just trying to catch, if you will, that next move to the downside.
Okay, trying to catch the next move to the downside. It's a bearish take there. So, Rick, what do the patterns in the chart tell us about Baba?
Sure. So, yeah, a lot of stocks did experience a similar decline and a similar rally on that news flow. It all started kind of around the same spot. It's pretty obvious where to look on these charts to find it. Now we can see, though, that Baba in particular found some support at this green line here. 98 represented a high point before we saw a gap up, a period of consolidation, and then kind of the breakout point here. It also lined up pretty closely with our purple 250 two-day exponential moving average. In the shorter term, we are breaking above this downward sloping trend line that began with these highs near 148.43. We are holding on above the confluence of our orange 63-day and our yellow 21-day exponential moving averages. They're both right on top of each other near about 117, 118 here. So, one thing that I do notice, though, is that we did not really fill this gap where we hit a repeated low point here, 126, and then we had another gap down. We haven't filled that level quite yet here. So any kind of breakout would be called into question, I think, until it starts to progress beyond that point here. RSI also not really making much of a bullish move either. We're kind of just right on top of that 50 midline there for now. So if things deteriorate, if we slip back below our moving average confluence, that could also start to wane as well. To the upside, volume node here comes in at this area near 135 or so. We are also quite close to our linear regression line, our line of best fit, our solid blue line, our idea of fair value, you could call it, at 120. Then another volume node to the downside near 107 or so.
Okay, all right, Don, let's move on to the next one on your list. You've got Netflix on your list, and you mentioned bearish take. Look, Netflix has had a banner year, and there are those who argue that this should have been in the Mag 7. But I feel like you're coming with a different view based on what I've seen in your notes. What's your take?
Yeah, right now, Netflix obviously breaking into its all-time high. I mean, what else do you say? It's at an all-time high, and that's usually the best place to actually short. Look, on trades like this, I want to be the first one through the wall. And I'm going to tell you right now, I am going to take some near-term pain on this particular trade. I'm not trying to time this perfectly. I'm going to go all the way out to the July 18th expiration. But the bottom line is, I think what we're seeing inside of Netflix right now is what we term a gamma squeeze, which effectively is traders that are just coming in and it's, buying calls, which is actually in turn causing market makers to have to buy stock. And we get into the cyclical feedback loop to the upside. And when that does come off, it will be wild. It will be woolly. let's also talk about the fact that if we are going to go into a recession, come on, even if there's a small probability, you think that's not going to impact really Netflix in the next few months? It absolutely will. So there's a lot of real fundamental reasons to take a bearish position in here. But this one to me is much more about this kind of gamma squeeze. This thing is being fueled ultimately by retail traders that are buying calls that eventually runs out of steam. I'm going all the way out to the July 18th expiration. I'm going to be buying the 1,000 puts, selling the 990 puts. This one's actually done for a $2.90 debit. Nice risk reward if we do fade quite a bit in Netflix.
Okay, so taking a little bit of pain on the front end, and there is time. I mean, look, time could either work against you or be on your side with this. But Rick, what does the chart tell us?
So the 1,000 level stood out to me as well. That's our light green line here. That was a period of high points. We had this kind of W-shaped price activity here. Well, we had a downward channel and then a push to the upside here. Where we eventually did take out our previous highs near 164, making some new intraday highs so far today, sticking along with our short-term trend line. RSI here entering the overbought area, which is typically regarded as a sign of strength in a trending market here. So we can also see our moving averages starting to diverge apart from each other, the faster one pulling away from the slower one here, so a sign of continued trend directionality. We can also see heavy volume spikes here, high conviction on the part of traders during this climb to the upside. And, certainly not saying that's going to continue or making a prediction here. What we can say, though, is that for now, the push up, it seems to be holding on so far. We have our +1 standard deviation channel, 1 standard deviation above our blue linear regression line, coming in near 1160. That could be one spot to watch for potential resistance based on this study. Or you could look for a pullback to 1064. A pullback to prior resistance, which then becomes support, is a common situation in trading. We could also look for that 1,000 level and our big volume area here near 975 or so. That's really where the heavy trading activity took place.
Okay, all right. Let's look at the chart for Netflix. But Don, let's go to your final trade, Nvidia. And I feel like, I know you're coming at this with a bearish take for this one, but I feel like if I remember right, and Don, you have to correct me if I'm wrong, that you are notoriously bearish. So correct me if I'm wrong there. Nvidia, obviously I could see the case for this more given the difficult year it's had, but what is your setup for this final trade?
I am much more notorious as a volatility trader, but you know what? I'll take any bearish position I can get because the skew out there kind of warrants it. So let me explain the Nvidia. First of all, the present trade war is actually playing into the hands very nicely of some competitors, specifically of Nvidia, one of them being Huawei. I mean, this is forcing Chinese firms to step up really advanced chip production, which I think we're going to do it anyway, but this really drives it right to the forefront of what they're going to be doing. This is not going to be a positive, okay, not only in the near term, but we're talking years out. They're gonna eventually catch up. This is causing firms even like Intel to have to step up, which has done nothing off of the earnings, obviously. But again, advanced chip production and GPU, there's going to be a lot of competition out there. Right now, Nvidia is still inside of a downtrend, which we're going to look at here in just a moment when Rick displays the chart. So I'm just going out to the May 23rd expiration. I'm going to be buying a 105 put and selling the 100 put. It's a $5 wide put spread for a $1.90 debit. I believe there's actually going to be a return in Nvidia just under the $100 mark in the not too distant future.
Okay, all right, Rick. So Don set you up for this. What does the chart tell us about Nvidia and direction?
Well, for now, progressing in a downward channel here. The trend direction is indeed more geared toward the downside here. We had this broader channel, our longer term trend line starting with these highs connecting at those points. But then we had a pretty big drop off here. We never really made our way back up to that area at all. Instead, we seem to have formed a parallel trend line here, almost matching up once again with our lows here. So this is sort of the new range here. A push beyond 107 would be signifying a breakout beyond this shorter term downward sloping trend. However, then we would be coming up to this area here, this red dotted line here that marks a series of lows and subsequent highs. 113 around that level also coincides with our purple 250 2-day EMA, our long-term moving average that we would use for support during uptrends, resistance in this case during a downtrend here. So we can also see that Nvidia did make a higher low during our declines here. So that would be more of a positive sign for the bulls. We never really came close to testing that old supportive area. RSI also on the verge of breaking out to the upside here. So look for a push in price beyond our resistance and RSI to follow suit for further bullish confirmation. However, we can see that we are still below our volume profile point of control. This area right here between 113 and 122, there's really quite a lot of resistance to overcome here. It also marks our recent relative highs, so that could be the area to watch to the upside. To the downside, recent trading activity has given us a small volume node here near about 103, and then our -2 channel comes in near 98.68. So around 99 or so.
Okay, all right. Those are the levels to watch right now. Shares of Nvidia higher today, up a little more than 2.25%. Thank you both. That's Rick Ducat, lead market technician here on Schwab Network, and Don Kaufman, co-founder of Theo Trade. Thank you both.